As the novel coronavirus has affected so many people across the globe, it's also affecting the well-being of global stock markets, not least Kuwait's, one of the oldest in the Middle East. The index has seen its value affected. It's also been absorbing April's news that MSCI, or Morgan Stanley Capital International, will delay upgrading Kuwait from a frontier market to an emerging market due to operational issues regarding the pandemic. The new date is yet unknown and could fall around November, says MSCI. A frontier market denotes one which is deemed relatively small and illiquid. These factors often make it less accessible to investors, whereas an emerging status implies a market is transitioning from a closed market system to an open market one, while developing economic reform programs according to Investopedia. And this status has been applied to some regional economies including Egypt, the UAE, and Saudi Arabia. Emerging market status puts a country's exchange one step away from becoming the highest level of a developed market. And with that comes improved financial transparency, efficiency, and foreign ownership access. The new classification of emerging market is expected to make Kuwait more open to foreign investment and bring in billions of dollars to the oil-rich country, as it takes steps to strengthen its private sector and aims to be a financial hub in the region. The MSCI came to its upgrade decision after the Kuwait Capital Market Authority made a number of significant changes, including restructuring laws to increase the accessibility of foreign investors. Many welcomed the news, and last year, Kuwait was the best performing market in the GCC.
Active investors are already started taking position in Kuwaiti stocks. Now, once the upgrade happens, passive investors, based on when they realign their portfolios, they will be replacing active investors. So that cash, the excess cash, the market is expected to decline, but then that will flow to the rest of the market, for rest of the region. So it's like it's a net positive win-win situation for both the regulator, for the markets, and the companies listed in the regional indices as well as Kuwait primarily.
The benefits of Kuwait's impending new status are numerous, says Ansari, including reforms to enhance the private sector.
Kuwait has one of the lowest break-even oil price in the region. It has the debt to GDP ratio is also one of the lowest. It is the most highly credit rating in the region, with fundamentally strong stocks, well-traded, highly liquid stocks, and an economy which is like undergoing number of reforms, number of changes. The regulators are supportive. So all this offers a very complete package to international investors to invest in Kuwait and benefit from the overall growth of the economy.
And Kuwait is looking to further its growth, Ansari says, with the prospect of more state-owned companies listing in the years ahead. For now, however, much remains on hold until the regional and global economy begin to normalize again in the wake of COVID-19.